And welcome back to Broader Financial Future, aka BFF. Hopefully you're having an amazing day so far. In today's video, I'm going to talk about one of my favorite subjects, and that's dividend stocks. I'm going to compare Walgreens Boots Alliance, ticker WBA, with Cvs Health Corporation, ticker CVS. We're going to compare and see which one is a better overall pick in today's video. But before we get started, make sure you smash that like button and subscribe if you haven't done so already. Now, stay tuned. And just a disclaimer, I'm not a financial advisor. Any investment may involve risks, so it's important that you do your own homework. This video is strictly for entertainment purposes only. Now let's jump into today's video. Now, I've been looking for new dividend stocks to invest in, particularly since CD rates are very low. I'm trying to move out all my CDs that's expiring into dividend stocks. One of the companies I was looking into was Walgreens Boots Alliance, ticker WBA. Then I thought, well, let me compare it with another one, which is Cvs Health Corporation, CVS. So we're going to talk about Walgreens Boots Alliance first, and then I'm going to talk about CVS Health Corporation. Now, Walgreens Boots Alliance, ticker WBA, is in the pharmaceutical retail space. Now, they have a PE, 4P next year estimate of 9.24. Currently, they have a PE at 17.66. So you can see their PE is looking like it's going to go down next year. Now, their current payout ratio when it comes to dividends, because I'm really looking at these companies from a dividend perspective. Their trailing 12 months, their dividend payout ratio is 82.02%. Which is a little bit high, but it is actually coming down in the last quarter. So currently, for the trailing 12 months, they're at 82.02%. Their dividend growth for the past 5 years have averaged about 5.36%, which is really good. So basically, on a yearly average, you're looking at an increase of about 5.36%. Last year, they did increase their dividend only 2.19%. And currently have a dividend yield of 3.88%. Now, that's a healthy dividend. It's pretty high. I really love that dividend when it comes to their yield. And Walgreens has increased their dividend for 45 years in a row. In addition, it's a part of the dividend aristocrats. So basically, this is a solid company when it comes to dividends, fully committed. And that's what I like to see in a dividend company. I love to see that they're continuing to raise it no matter what's happening in the world. Last year, we had the tragic pandemic that was going on in the world. Even the real estate crash, I think in 2008, 2009, they still increased their dividend. So whatever's going on in the world, they tend to increase their dividend, which is very important. So that's one of the things I like about Walgreens. They're fully committed to the dividend. And that's what I like to see here. Now, when it comes to some of the other metrics I like to look at, they're definitely a large company with a market cap of $40 billion. Their operating margin is very small, but in the space they're typically low. So their operating margin is 2.48%. The revenue growth for the last 5 years averaged about 16.17%, and their EPS growth for the trailing 12 months versus the prior trailing 12 months is a whopping 320%. So last year, they definitely killed it. Their free cash flow is at $4.98 billion. So the pandemic really helped them out because the vaccines, people were going into their establishments to get the vaccine, or I guess they're still doing it now. That really helped them out, especially when everything was closed, depending on the area that you're in. These places was considered essential businesses for the most part. Another thing I want to look at here is actually like an entry price, right? When I look at their current price, at $46.72, depending on what day, it might give or take $1 or $2 when you're watching this video. It's below its 50-day moving average of $52.78, and it's also below the 200-day moving average of $50.84. So it's definitely trading at a discount when you look at the moving average price. It's trading below its 52-week high of $57. So this stock is definitely undervalued, and Yahoo has a price target of $53.50. So currently, it's below its 50-day moving average, the 200-day moving average, and the 52-week high. Especially a company like this, I like to get it below those numbers. In addition, when you look at their 52-week performance, is at 12.48%. So it didn't really perform too well within the last 52 weeks, but they're still up. So when I look at this company, I'm not really looking at a lot of growth, but I do see some growth potential because this company has been beaten up, really nicely. Now it's taken a huge hit as far as when it comes to the stock price. Dividend is definitely solid at 3.88%. So I definitely like the yield on that. In addition, they have a tendency to increase their dividend, so that's very important as well. The question is, was this a temporary boost in 2020 due to the circumstances? Are we going to see future growth? Who knows? Management predicts 10% growth, so we'll see with that. Still, you have the flu season coming up, and if you took the vaccine, in addition, you might need a booster shot as well. So that will get people into the stores for those flu shots and booster shots if needed. Also, one thing I think is interesting what Walgreens is doing, they're teaming up with Village MD to open 29 food service primary care practices in Texas this year. So that sounds very promising. We'll see how it goes in Texas and some of their other sites, but I definitely want to see how that's going to go. But they do have competition with CVS. There's a lot of companies that want to get into the healthcare space. There's rumors about Amazon and so forth. They have a lot of competition coming up. But currently, I like what they're doing with the dividend. But let's move on and talk about CVS Health Corporation, ticker CVS. Tongue twister right there. Now, the industry is listed in healthcare plans, but I kind of look at both of these companies as very similar companies, even though they're listed in two different industries. When I look at the PE for CVS, it's definitely lower than Walgreens at 14.29. And when you look at next year estimate, they're about the same at 9.8 for CVS and 9.4 for Walgreens Boots Alliance. Now, when it comes to the payout ratio for the trailing 12 months, CVS definitely have room to grow their dividend. They paid out 35.59%. That's for the trailing 12 months when it comes to the dividend payout. The only thing is, when you look at their average dividend growth history, they've been kind of inconsistent. Really, they haven't really increased their dividend last year, so I'm not even going to count their dividend growth history because it's really non-existent for the last couple of years. So basically kept it flat. They currently have a dividend yield of 2.43%, which is definitely lower than Walgreens. So you're looking at when I look at their dividend yield, is lower than Walgreens. So Walgreens definitely has a better dividend yield. Definitely have a better dividend yield when it comes to that. When I look at the current price of $80.22, another matrix I like to look at is market cap. CVS has a market cap of $105 billion. So they're definitely way bigger than Walgreens, which is actually funny. I never really looked at both companies in depth like this. I always thought they were kind of like neck and neck, but CVS is basically almost 2 times bigger than Walgreens as a company when you look at their market cap. They definitely have better operating margin at 5.04%. So they're definitely winning in that category. And their revenue growth for the last 5 years is 11.85%. Definitely better than Walgreens. But their EPS growth for a trailing 12 month versus the prior trailing 12 months is 1.81%, which is lower than Walgreens. Walgreens really did a good job with that last year. They have free cash flow of 12.93%, which is definitely way better than Walgreens, but they're definitely a bigger company. So 2 times the size you would expect them to have. We will hope that they have more free cash flow. And some of the things I like to look at when it comes to these companies are the current price, which is $80.22, depending on what day you're looking at it. This video, they have a moving average. The 50-day moving average is $85.27. So it's trading below its 50-day moving average, and it's trading a little bit above its 200-day moving average. So it's kind of like a little bit below the 50-day moving average. So this stock actually took a little bit of a beating in the last recently, but it's trading above the 200-day moving average. So the fair price is below its 52-week high. According to Yahoo, they have a price target of $94.82. So that's like a $14 swing. And when you look at the 52-week performance, they're up 27.25%. So when I really look at both of these companies, let me pull up CVS first. When I really look at these two companies, right? If you look at their 5-year history, they're both down. They're both down a little bit. CVS is down almost 15% in the past 5 years. But in the past year, CVS has been doing pretty well. But in the last month, it's starting to take a little bit of a dip as well. So there's definitely some opportunity and room to grow when it comes to CVS. And they're definitely trying to increase really their overall healthcare service. And I actually like CVS. Actually, I like Walgreens and CVS, but I'm closer to a CVS. And I love the coupons. I feel like they have pretty good coupons that I like to use when it comes to their actual company. When I look at Walgreens, their stock has tumbled. Like if you look at their 5-year chart, it is doing pretty bad. You're talking about almost a 50% loss in the stock market in the past 5 years. In the past year, it started to tick up, but definitely at a lower pace than CVS. But even when you look at the last 3 months, Walgreens is definitely taking a bit of a hit too. When I look at both of these companies, some of my final thoughts are, when I look at Walgreens, I like their dividend. I like their dividend yield. I like the fact that their prices, I like that they're trading below their 50-day moving average, below their 50-day moving average and their 200-day moving average and their 52-week high. I like some of the things they have in place. The question is, how long can they continue to increase their dividend? They're definitely committed to the process, but as habits change, people are ordering out more. Basically, you order anything from Amazon. So a lot of things are changing when it comes to people habits. So this is a company I'm definitely going to keep on my watch list. I'm interested in it. One of the things I like to have is something that's going to preserve cash, my initial investment. I think right now I'm really considering this one because I feel like it's been beaten up a lot lately, and I think it still has room to go up. So even at its current price, I can see the stock kind of rebounding because I feel like it's taking enough beating right now that it has a deep value and discount when it comes to Walgreens. Now, CVS, on the other hand, CVS has a better chance to maintain the growth of the stock. So even though I like Walgreens dividend more, but I'm just looking at dividends, I'll probably go Walgreens Boots Alliance. But if I'm looking at the growth of the actual stock, then I might go CVS. So both companies, it depends on what you're looking for. I think they're both solid companies. If you're looking to put your money and have it grow with dividends, Walgreens might be the place to put it. If you wanted something that might have a little bit more growth, then CVS might be something worth looking at. They've both taken a hit recently, so they're both trading at a fair value, but they're also worth putting it on your list. You're not ready to buy now. If it goes down a little bit lower, I'm definitely going to jump on them, but they're definitely worth your consideration when it comes to dividends, especially when it comes to Walgreens. CVS, I would love to see them in the future continue to grow their dividend and let that be more of a priority, but right now it is what it is. So let me know, what company you like more, Walgreens or CVS as a stock? In addition, what company do you actually shop at? Do you actually shop at Walgreens or CVS? Don't tell me it's Rite Aid, but let me know your thoughts and comments below. Let me know what companies are some of your favorite when it comes to dividend stocks. And until next time, everybody, have a good one. Peace.